While global markets continue to comprehend the mountain of tariffs unleashed by US President Donald Trump, South Africa's lucrative PGM sector has seemingly been spared. Of the total South African exports of mineral products and precious metals to the United States, South African Platinum Group Metals accounts for more than 76% of exports, totaling almost 50 billion rand. But while the tariff exemptions for PGMs have been viewed positively, it's still too early to ascertain the total impact on the sector. For example, given the heavy application of PGMs in the auto industry, the 25% tariff on vehicle imports imposed by the US could still result in a volatile PGM market, something those in the space are more than familiar with. According to industry leaders, the key response to the tariff exemptions revolved around one word: opportunity. Minerals Council South Africa CEO Mzila Mthenjane said the tariff exemption could provide an opportunity for increased market development, particularly given the potential that remains with internal combustion engines, as well as its applications within the green hydrogen economy. And in a similar vein, Sibanye-Stillwater CEO designate Richard Stewart also outlined the beckoning opportunity for PGMs as a result of the tariff exemptions, telling Mining MX earlier this month that it restated how PGMs should be treated as the critical metals they clearly are. The opportunity for market development remains clearly in play, and that should bode well for a budding developer like Southern Palladium. As one of the last undeveloped projects in the much vaunted Bushveld complex, Southern Palladium's Bengwenyama project presents a major value add opportunity, particularly in light of Southern Palladium's successful drilling program, which has already established a total resource of more than 40 million ounces, followed by a comprehensive pre-feasibility study which included an NPV calculation of over $1 billion. And while the PGM sector was largely on tenterhooks as they waited for a response to Trump's tariffs, rhodium's recent rally has buoyed explorers and developers alike. Rhodium prices have risen by 27% this year, prompting representatives of South African mining major Amplats to label it the canary in the coal mine for the PGM sector. And alongside the structural supply deficit in platinum, analysts have observed a reduction in global inventory levels for rhodium. It's important to note that according to Bengwenyama's pre-feasibility study finalised in October last year, that rhodium contributed 28% of the forecast revenue at 590,000 ounces. Tariffs aside, the demand trend for hybrid vehicles continues to outpace battery electric vehicles, underpinning support for global PGM demand. This points to an industry where tailwinds continue to swirl, and in that environment, a budding developer like Southern Palladium remains on track to flourish in 2025.